To be honest, most people haven't really felt the aftershocks of the recent financial earthquake that rocked the world. The true story is being quietly told in boardrooms, embassies, and central banks throughout the BRICS Plus coalition, while the Western media keeps pushing distractions. Brazil, Russia, India, China, and South Africa are among them. Countries including Iran, Egypt, Argentina, and Saudi Arabia have since joined. These nations are fed up with the US dollar's hegemony. They have been subtly laying the groundwork for a new international financial system, one that rejects dollar hegemony in favor of something much more equitable, stable, and resilient to the future. A reserve currency backed by gold that settles with XRP. Give it some time to sink in. The fastest growing economic bloc in the world, which controls over 40% of the world's population, 30% of its GDP, and most of its commodity production, is set to break away from the US dollar and establish a new monetary system based on gold and XRP. This is not a rumor according to secret documents that are making the rounds among global financial insiders. The strategic rollout is already in progress. Beyond official announcements, the central banks of the BRICS countries have been hoarding gold at historic rates. In anticipation of a significant liquidity shift, central banks and state-owned organizations have started buying XRP off-exchange and over-the-counter. The strategy? To use the XRPL Ripple's decentralized and incredibly effective ledger to tokenize gold reserves and settle all international transactions. The illiquidity of gold, one of the oldest financial problems in history, would be resolved by this action. Although gold has long been a trustworthy way to hold value, it isn't ideal for quick exchanges. In contrast, XRP is scalable, lightning quick, and unreliable. When combined, they produce hardback digital value with real-world liquidity, the golden grail of monetary systems. We have been discussing this moment for years. Finally, it's here. The BRICS countries now have a direct, effective, and safe way to trade without using the dollar or the fast system because to the combination of tokenized gold and XRP settlement. This implies that there will be no more currency sanctions, U.S. trade monitoring, or susceptibility to foreign interest rate or treasury manipulations. BRICS has chosen to opt out. However, why XRP? Why not make their own token or blockchain? The solution is straightforward. XRP is already functional. The infrastructure is there. Its performance is tested by the central bank. It complies with regulations in a number of jurisdictions. It is widely used, decentralized, and scalable. More than 70 financial institutions and central banks are already partners of RippleNet. The XRPL has demonstrated dependability over 10 years. BRICS doesn't need to start from scratch. So how does this establish a floor price of $100,000 for XRP? Let's dissect it. Over $5 trillion in cross-border trade is processed annually by the BRICS Plus bloc. $500 billion is involved if only 10% of total trade volume is settled in XRP. Imagine now if only one transaction is made possible by each XRP token every day. This implies that the market must sustain a daily liquidity flow of $1. 37 billion utilizing the supply of XRP that is available. Only 100 billion XRP were ever created, and even less are in circulation due to institutional holdings and cold storage. Therefore, the price per XRP would have to skyrocket simply to support that load. This is when it becomes even more severe, though. The strategy brief that was released states that the BRICS central banks intend to permanently remove 70 to 80% of their XRP assets from daily market activity by locking them up in sovereign cold storage wallets. This would stifle supply to previously unheard-of levels, causing a price spike caused by scarcity that would make $100,000 per XRP not just feasible but also necessary. This goes beyond mere conjecture. This has to do with the mechanics of money. As the backbone of a multi-trillion-dollar financial system, XRP would be transferring hundreds of billions of dollars every day, backed by gold, validated by code, and unencumbered by the petrodollar's geopolitical sway. Now consider the timing. There has never been a debt crisis like the one the U.S. is currently experiencing. Diminishing purchasing power, growing interest rates, and trillions of unfunded obligations, and a total breakdown of global confidence in the Federal Reserve System. Meanwhile, allies of the United States are quietly hedging their bets while watching BRICS execute a synchronized retreat. Banks across Europe are investigating RippleNet. Oil-producing countries in the Middle East are discussing XRP settlements for energy exports. The use of blockchain-based financial infrastructures is accelerating in Asia. Behind the scenes, the dollar panic has already started. The real players are already positioning, while the average investor is worried about CPI statistics or SEC cases. Private XRP trusts are being established by hedge funds. Requests for Ripple integrations are coming from sovereign wealth funds. And American establishments? They're either prepping in complete secrecy or dozing off behind the wheel. This won't be covered by the mainstream media until it's much too late, because it will be too late to invest at today's prices once this goes public and the gold-backed Brics currency, which is based on XRP, is formally introduced. Exchanges will become illiquid, order books will dry up, and price disparities will occur, not by pennies but by thousands of dollars at a time. This isn't a gradual ascent. This monetary event is binary. You're either left behind after the flip or in before it. And this is what, from a system perspective, makes this so lovely. XRP is a protocol, not just a coin. It no longer has to be hypothetical. It will be utilized on a daily basis by trade settlement systems, banks, and governments. It turns into financial infrastructure similar to TCP/IP. Price thus becomes a secondary consideration. Demand takes over as the sole motivator. What about supply? We already know that's getting smaller. The real usable supply of XRP may drop below 10 billion due to future lockups, lost keys, burn fees, and Ripple holdings. I can't wait to see you again in the next video. Be careful.